Ladies and gentlemen, good day and welcome to Bansal Wire Q3 FY26 earning conference call hosted by Anand Rathi Share and Stock Brokers Limited. As a reminder, all participant line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Parthiv Jhonsa from Anand Rathi. Thank you and over to you, sir.
Thank you, Danish. Good afternoon, everyone, and thank you for joining Bansal Wire Industries Limited Q3 FY26 earnings conference call. We at Anand Rathi are pleased to host the management of Bansal Wire Industries Limited. From the company, we have with us Mr. Pranav Bansal, Managing Director and CEO, and Mr. Ghanshyam Das Gujrati, CFO. We would now like to invite the management for the opening remarks, which will then be followed by question and answer session. Thank you, and over to you, sir.
Thank you, Parthiv. Good afternoon, everyone, and welcome to Bansal Wire's Q3 earnings call. We are pleased to report that Q3 has been another strong quarter for Bansal Wire, reflecting better operating execution and sustained demand across core and end markets. During the quarter, we delivered our strongest ever operating performance, supported by robust demand across automotive, infrastructure, and general engineering. For the 9 months ended, we have maintained a consistently strong growth trajectory, reflecting the depth of customer engagement and the scalability of our operating platform. Even though it was a challenging first couple of months due to labor shortages on account of early Diwali and Bihar election, but we picked up in December, achieving our highest ever monthly sale of 45,000 tons. This growth has been effectively supported by our expanded manufacturing base of over 6 lakh tons, which has enabled us to serve rising customer demand without compromising on delivery timelines, product quality, and service levels. But more importantly, this capacity is no longer just driving volume growth. It is increasingly helping us upgrade our product mix towards higher value segments. During Q3, we made a significant strategic move by strengthening our specialty wire added portfolio. We have successfully launched induction hardened and tempered IHT wires by adding 9,000 tons of high performance capacity. This product is primarily used in automotive suspension springs, allowing us to deepen our engagement with automotive OEMs and Tier 1, while improving our long-term margin profile. I'm also pleased to tell you that we were able to stabilize this product within the first month of installation and have already started commercial sales. Looking at the response we are seeing from our customers, we have also started phase 2 of expansion by adding another 6,000 tons of OHT wire, which would also come on stream within the next 2 to 3 quarters. Alongside this, we continue to see strong traction from LRPC, which was launched at our Dadri facility with a capacity of 18,000 tons. This product caters to infrastructure applications such as bridges, beams, and long concrete structures, enabling us to participate more meaningfully in India's growing infrastructure pipeline. Together, these launches not only expand our volumes, but also reposition Bansal Wire towards structurally high growth areas and higher value added end markets. Another positive I would like to highlight is that we've generated almost 240 crores of free cash from operations, which was almost our full year's target. And with another quarter left, I'm confident we would be able to achieve much better than expected on that front. Our ROC has also been consistently improving every quarter, and I believe we are on track to achieving 25% ROC by the end of next year. So that's all from my side. I would like to hand over the call to our CFO, Mr. Ghanshyam Das.
Thank you, Pranav sir, and good afternoon, everyone. I will briefly summarize the key operating and financial performance for Q3 and 9 months FY26. During the quarter, company delivered a record sales volume of 121,000 metric tons, representing a strong 32% year-on-year growth and 6% sequential growth over Q2 financial 26. This is the highest quarterly volume ever recorded by the company. For the 9 months period ended, financial year 26, total volume stood at 340,000 metric ton compared to 246,000 metric ton in 9 months FY26, reflecting a healthy 38% year-on-year growth, underlying the consistency of our operating performance. This strong volume has been supported by our expanded installed capacity of approximately 18,000 metric ton and commercialization of new products such as LRPC wire with 18,000 metric ton, as already mentioned by Pranav sir. And the healthy demand from the cable, automobile and general engineering sector, these drives have enabled us to scale efficiently while improving the quality of our revenue mix. Turning to the financial for quarter 3 financial year, our revenue stood at 29 crores, representing 11% year-on-year growth. EBITDA increased by 19% year-on-year to 87 crores with a margin of 8.4%, while the net profit for the quarter was rupees 43 crores. That is up 4% as compared to the period last year. The operating cash flow generated during the 9 months period to be 233 crores, and the company generated cash flow from the operation during this quarter, that is 85 crores. For the 9 months period ended financial 26, revenue grew by 18% year-on-year to 3023 crores, while the EBITDA came into rupees 243 crores, reflecting an increase of 19% year-on-year. Net profit of 9 months for financial 26 stood at rupees 121 crores, higher by 7% on year-on-year basis. This concludes my remark, and we will now open for the floor for the question.
Thank you so much, sir. Ladies and gentlemen, we'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Kunal Sharma from Veritas Research and Advisors. Please go ahead.
Yeah, hi, Pranav. Good afternoon, and I hope I'm audible.
Yes, you are. Please go ahead.
Yeah. So, Pranav, just wanted to understand, can you please throw some light on the GST-related issues which we faced a couple of months back? So, notice was somewhere around 206 crores. So, what's the status on that regard, and how does that impact on our financial if being imposed by the GST Council then?
Sure.
Sir, actually, we have already intimated to the exchange. Now, everything has been sorted out. And there is no demand right now. And the little bit demand is there. And we have already filed appeal to the higher authority for quash of the order which has been given by them.
So basically, I think these were some unrealistic demands that came from the GST department, which I think we've already settled to the tune of, they've reduced it to the tune of 98-99%, and the remaining will also be squashed very soon.
Okay, so we will not going to see any impact on our financial person. Okay.
No, almost nothing.
Almost. My second question on during the quarter, we got an approval from the customer for IHT, right? So will you please elaborate more on this particular thing? on the volume side, and how would be the quantum, and what are we supposed to, close by the end of this FY26 with regards to IHT and OHT, if you can?
Sure. So IHT was a product that we started, which is used majorly in the suspension application for 2 and 4-wheelers. This is a product that is, increasingly replacing regular steel wires in all high-end and EV vehicles. So we started this product in Q3. The thought process was that we would take about 6 months to receive some customer approvals. But I think the team did a great job there. We were able to stabilize our product within the very first month. And from the demand side, I think it has been quite positive. We've already received some customer approvals, and I think this month we are looking at maybe a 20% capacity utilization already. Our revised target for this year is to reach about 40% capacity utilization. So yeah, I think that's the main thing. Looking at this, we've already started the phase 2 expansion. So the capacity was 9,000 tons, which we are now expanding to 15,000 tons. This should be done in the next 2 to 3 quarters.
Okay, for the IHT, right? 9 to 15,000.
Yeah, IHT and OHT combined. So these are similar products. IHT is what we call a thicker size, and a finer and a smaller size is what we call OHT. So kind of a similar application. So from 9 to 15,000 tons, that's the thought process now.
And how would that beneficiary for us to, accelerate the margin going forward there?
Sure. So we are already, I think we have already achieved our margin target here. Although we are not seeing absolute profitability in this segment today because of low capacity utilization, but I think we will get there within Q4. So yeah, I think margin-wise, I think it's almost double than the regular high-carbon wire that we make.
Okay. And if you can throw more light on the product mix, considering the specialty wire, where we stand today, and what are we target to and by the end of this FY26 or so?
Yeah, sure. So I think there was an unfortunate incident in our plant where there was a fire in our specialty wire shed. Although there was no material damage, but I think we have now received approvals from insurers to start back the project. I think it will still take us about a month and a half to stabilize the steel cord front, after which we will resume our approval cycle, which was already set. I think the target for us was mid of next year. I think we are still on that, maybe delayed by maybe a month or so. So once we achieve that, we will be able to achieve our commercial production or sales within Q2 or Q3 of next year. Apart from that, IHT and OHT, they have done well, better than expected. So bulk of the growth for next year will come from IHT and OHT. And from, I think, FY27 is when we would be looking at the good numbers of steel cord coming in. So once that does, I think our margin profile will significantly improve within next year and the year after that.
Okay, and I guess the product mix somewhere around 4 to 5% of the entire volume, the specialty wire, considering all these three?
Yeah, so the product mix is now about 5% of the total volume. That's to start with. But in terms of volume, yes, it is about 4 or 5%. But in terms of contribution towards EBITDA, I think this can be contributing about 15 to 20% of the total EBITDA going forward.
Okay. My third question, and Pranav, just to understand your thought process on the profitability, the run rate is remained same over the last many quarters, so despite of growing 20% growth in the EBITDA. So why it's not reflecting into our PAT, and what do you see like the gradual recovery in the PAT?
Yeah. So as I mentioned before, our target for this year was a growth of about 30%, which we revised to maybe towards 40% within this year. I think we are already on track for that. I think we've done more than 35% growth till now. So that should remain positive for the fourth quarter as well. We were looking at a slight dip in EBITDA starting at the start of the year, owing to a product mix change, which has not virtually happened, which was what we explained on the last call as well. I think our EBITDA, which was supposed to dip, is now constant, and it should remain constant within this year, even after this volume growth. And next year, we are looking at a better product mix. This will give us a better per ton EBITDA going forward. This year, our focus was more on cash flows and our return profile. So I think, that's the main focus area. This year, we want to focus majorly on cash flows and our ROC, which has started increasing already.
Okay. So, you mean to say gradually, from FY27 we start, the EBITDA will start reflecting into the PAT as well? Because over the last many quarters, we have seen 40 to 43 crore of PAT, right?
Yes. So in the last quarter, we have capitalized all interest costs. We have capitalized all investments. Therefore, you see a jump in depreciation as well as interest. Although our cash profit has increased by 15-20%, but PAT level does not reflect that because of higher depreciation. But we don't have any more interest or depreciation cost that we are capitalizing anymore. So any growth here on in EBITDA should also reflect in PAT.
Thanks. Thank you, sir.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question comes from the line of Vineet from Investec. Please go ahead.
Hi, Pranav. Good afternoon.
Hi, sir.
Pranav, my first question is, looking at our current run rate and EBITDA per ton being broadly stable now for the last 2-3 quarters at 7.1 rupees a kg, don't you think our EBITDA growth, if we include other income as well, the way we define it, should grow at more closer to 25% than 20%? And similar, could volumes be more closer towards the upper end of the guidance, 35 to 40% guidance?
So, sir, that was in fact our target for Q3, but Q3 has not, although we have shown good results in Q3, but it could still have been better because of October, November, we lost some volumes because of labor shortages. I think Q4 is something that we also look forward to. We are already seeing good tractions from all our segments. So yes, in terms of volume, we should be able to do a little better in Q4. And if we do good volumes, our EBITDA should also increase. But as of now, I would like to stick with my guidance. I don't want to take a lot of pressure on the system. Yes, we do have scope to improve. We do have room to grow. But let's see how it goes.
Fair. Secondly, Pranav, the question was on cash flow. This year, we've done decent OCF in the first 9 months of the year. You're expecting that to continue in Q4 as well. How should we think about FY27 from a cash flow perspective post this? And if we are assuming a similar sort of a run rate in terms of OCF, what should drive this? Is it the case that we've not started any discounting as yet, which will contribute to positive OCF going into FY27?
Sure. So this year our target was to maintain the same level of inventory, the same level of receivables, even while growing at 35%, the same level of debt without doing anything else, but still being able to grow at 35%. If we were to do that, we estimated that we will get about 250 crores of free cash flow, which we now have already done. So I think we have a quarter left. We should be seeing similar trend in Q4 as well. For the next year, our target was 350 crores. I think that is still intact. Looking at what we did in this year, we should be able to achieve that easily as well. This will come definitely from a lot of discounting and other provisions that we are making for inventories and our receivables, but also through channel financing and a lot of operational changes as well in terms of inventory and receivables that we have done. So I think, a combination of what we have done this year should also flow into next year. I mean, we should be able to achieve our target.
Understood. So we maintain that roughly 600 crores of OCF over 2-year period still should be doable.
Yeah, of course.
Perfect. Thanks, Pranav, for this. Thank you. And just, Pranav, just last one from my side. If you can give some updates, where are we on the approval side with customers on the steel cord business, lab trials, field trials, how long will it take, what should be the timelines there we should consider?
So I think we are behind by a month because of some approvals that we have now received from the insurance companies to start production. But other than that, I see no major change there. We are on track otherwise for field trials and lab approvals. I think the last company that we are expecting lab approval from should also come in the next 10-15 days. After that, we go to field trial once we have our plant up and running, which will take about a month and a half. So Q2, Q3 is our target still for starting supplies of steel cord. Apart from steel cord, the second product for specialty was IHT. That has already started and that's doing well. So I think we should be able to see some traction from there from steel cord.
Understood. Thanks, Pranav, for this. Thank you.
Thank you. Our next question comes from the line of Aditya Pal from MSA Capital Partners. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Yeah, thank you so much for the opportunity. So I just have one question. Wanted to quickly get an update on the consolidation of our related party entities, that is Balaji Wires and Bansal High Carbons. If you can help us know where we are, because last couple of concalls we had mentioned that we are planning to consolidate it, and it will happen maybe in the next 18 to 24 months.
Yeah, so there are two parts to this consolidation. First, on financials, that has been consolidated last year. I think last December, last year Q3 is when we consolidated all financials. The only thing that is left right now is that there is still some production happening in those two entities in the older plants, but that is only being done for Bansal Wire. So those two companies are not operating independently anymore. Whatever they produce, it is for Bansal Wire, which is still happening and should we would take another, I think, 2 quarters or 3 quarters for that to shift to Dadri because of the Dadri ramp-up, which is slower than expected. Although on Dadri front also we have done well. I think we've improved our capacity utilization. In fact, we ended the year at almost 60% capacity utilization in Dadri. So I think as and when this improves, even the production for those two entities will stop. But all revenue and profitability has been in Bansal Wire for all these companies from last year.
Understood. So so correct me if my understanding is wrong. So only the consolidation is yet to happen. That is in terms of the entity wise, that them merging into.
So there is no plan of any merger or anything like that for those two entities. Those two entities have to just shut down.
Understood.
So Bansal Wire, they're only producing some quantities for Bansal Wire in their own manufacturing setup, which is not very viable and will shut down in the long term.
Yeah, you've already clarified that they only do job work for the current listed entity, but just wanted this update which you provided. Thank you so much for that, and wishing you and the company all the very best.
Thank you, sir.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of H. Shah from Dalal & Broacha. Please go ahead.
Yeah, hi Pranav. Just one question. In the last Concall, you had mentioned the low carbon wire happens to be the higher ROC business instead of being a lower EBITDA per ton category. So could you just give a gist on the asset turnover of each of the categories, the low carbon, high carbon?
Sir, I do not have numbers of asset turn of each category right now. But yes, low carbon, even though it is a lower EBITDA per ton business, the asset turns are generally better. That's why the higher ROC that we understand, and that's the focus area as well.
Okay, fine. Just any ballpark number that you could give?
So I would say low carbon is, asset turn would be about 2.5 times of our general high carbon portfolio and at least twice of the stainless steel. So that's the difference between these three.
Okay, fine. Thanks a lot. That helps.
Thank you. Our next question comes from the line of Parthiv Joseph from Anand Rathi. Please go ahead.
Hi, am I audible, sir?
Yes.
Yeah, thanks for the opportunity. And thank you for allowing us to host the call. I just have a couple of quick questions. Just taking one of your remarks from earlier, taking forward that you said that your older facilities are basically doing job work for Bansal wires, right? So once the entire capacity moves to Dadri at the end of the day, what is your plans to do at these older facilities? Any idea?
So these are two very unviable and very old facilities. Right now, we are only running it just to service the market because we don't want to lose our customers till the time we have the right production in Dadri. We don't earn much from these two entities. As and when we are able to shift our capacities, I think this will just shut down. So that's the plan. And the two entities, they're outside of Bansal Wire, and we have no plans of merging these two entities because there will be nothing left here. The plant and equipment, all of it was already purchased by Bansal Wire. So they're just operating on lease as of now.
All right. Thanks for the clarity. The next question is pertaining to the fire. I think your insurance is claim settlement is still going on. I just wanted to get your idea on what is the expected, losses you expect post your claims and everything, because then that will have some overhang on quarter 4.
Sure. So we have already posted an exceptional loss of 1.5 crore. That was due to the inventory loss in the fire, which we've estimated. Everything else was insured. I think the only loss that we were looking ahead was in inventory, which we've already done in Q3. So we do not expect anything material to happen in Q4 as well.
Oh, okay. That's actually good to know, sir. So the third question, I just wanted to get your clarity because I think there has been some confusion that, what is the current capacity between high carbon, low carbon, stainless and specialty, and how the roadmap is planned out, in say FY27 and 28. Because in presentation, you have indicated that you are planning on 90,000 ton kind of a capacity expansion, say by FY28 in Gujarat. So can you just give a breakdown of high carbon, low carbon, stainless steel and specialty? And what do you expect in 27 and 28 going forward?
Sure. So right now, out of our capacity of 620,000 tons, I would say about 55-60% is low carbon. 20% would be stainless steel, and the rest will be high carbon. And I think going forward also, we are looking at similar numbers. The only difference could be in low carbon, where we expect at least 60-62% of the total capacity. So if you look at our Sanand Capex also, we are expanding low carbon and stainless steel there. Whereas in high carbon, we have capacities to expand in the Dadri facility in phases. So overall, again, the thought process is to still have 60% kind of a low carbon capacity and 20-25% high carbon and 20% stainless steel, even on Ceralac.
And what about the specialty? Where do you categorize it? Because I know specialty, depending on the product, it basically moves across the category, but just wanted to get an idea.
So specialty, right now we have a capacity of about 29,000 tons, which we will expand to 35,000 tons within the next 2 to 3 quarters. So that will still be maybe 5% of the total installed capacity.
And this includes the steel tire cord 20,000 tons?
Yeah, this includes the pilot of 20,000 tons for steel tire cord.
And also the one which you're taking from 9,000 to 15,000 IHT OHT, right?
Yeah, so specialty comprises of these two products, steel cord and hose wire, which is 20,000 tons, and IHT and OHT, which will gradually be 15,000 tons. So 35,000 tons combined for these two products.
And sir, I think you just mentioned that you're waiting approval in next couple of days from, I think that's a phase 1 approval, right? From one of your clients is still pending.
Yes. So for steel cord, we are anticipating the last approval that we were targeting maybe within the next 10-15 days or something like that. Yeah. After this, we will start phase 2 for all customers.
Okay. And so if I may just squeeze a quick last question. Just wanted to get your EBITDA per tons, guidance for 27 and 28, because right now in, I think, quarter 3, finally you have inched back towards that 7,000 mark after almost 3 quarters. So just wanted to get your guidance on what do you expect in EBITDA per ton going forward, improvement there?
Sure. I think we are not looking at a very significant change in terms of our product mix. There will be a bit of low carbon increasing, but there will also be numbers coming in from specialty. So like this year, we were anticipating our EBITDA per ton to go down. Next year, we do not see that. We see specialty wire kicking in, and gradually the target, of course, is to increase this to 8.5 or 9 over the next 1 or 2 years.
Perfect. That actually answers all my questions. Thank you so much.
But overall, I think for EBITDA per ton, we focus more on the final growth. So I think the standard 20-25% kind of growth we would like to achieve, every year. So yeah, overall sounds fair. Yeah.
Perfect. Thank you so much.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Kunal Sharma from Veritas Research and Advisors. Please go ahead.
Yeah, thanks for the follow-up. Pranav, wanted to know your thought on the Sanand facility. So we now dropped the backward integration plan. So, and still we have 40 acres, I guess, a free space over there. So what's the status on that particular thing? And where I supposed to put the bead wire and the stainless steel wire, I guess, if I'm not wrong.
So bead wire, we've already started, and this was planned for the Dadri facility, not in the Sanand plant. In Sanand, it is more low carbon and stainless steel. So 50% of the land that we acquired was for backward integration, whereas 50% was still for wire. I think we are utilizing that 50% as of now. We started, with this 90,000 tons capex, and this again has a potential to go much higher than the current numbers in different phases. For the balance 50% land, I think we are still evaluating. We see a possibility of being able to utilize this in the current wire facility also. But, I think that's still to be yet to be decided. So we might take a call within the next 1 or 2 quarters where we sell it off and monetize, or we will use it if we see further expansion, a need of further expansion there.
On a capacity utilization, today we stand at 78%, and we guided for 80 to 85% in the next 2 to 3 years, I guess, FY27, FY28. So are we stick with the guidance now?
No, as far as capacity utilization go, our target is always to achieve 90% kind of a capacity utilization. That's where we are able to get the best returns of our investments. But yes, we have come out of a major capex cycle. That's why, in the last 1.5 years, we've seen these kind of numbers. Otherwise, historically, we generally only operate at 90% kind of a capacity utilization. So going forward, also, our first target is to achieve 90 and then to expand each and every quarter or every 6 months wherever required, so that we do not come down to this level again.
And by when we are targeting to achieve 90%?
Sir, if you look at our current trajectory, we are already at 78%. So within this capacity that we have of 6.2 lakh tons, I think we should be able to do that within the next 2 quarters, 2 or 3 quarters, I think. But with this, we are also expanding. So every quarter or every 6 months, we now keep wanting to, now we want to keep expanding as well. So there is still a 60,000 ton capex lined up in the Dadri facility for us.
Okay. And at the end, we want to be at the 80,000 ton capacity in blended, combine all the portfolio that we have today, right?
So as of now, the capex that we have planned is 60,000 tons additional for Dadri and about 90,000 tons for Sanand. So from 6.2, we should be able to go to about 7.7.
Oh. Okay. So, like we will be the largest player in the country. I guess we will be supposed to surpass the Tata Wire as well. So and considering the 90% capacity, so what are the market share that we are expecting, and what was the trend over the last, I would say, 1 or 2 years, and where are we stand today as far as the market share is concerned?
So the market is also
market share, right?
The market is growing at about 7-8%. I think we were at about 6 or 7% kind of a market share. With the current capacity, yes, we are now, as far as capacity goes, I think we are now the largest in India.
Mm-hmm.
So, yeah, I think we'll, and obviously we want to keep growing at 20-25% in terms of volume as well over the long run. So once we do that, we are every year, I think we are capturing market share. So in the very near future, in the next 2 to 3 years, I think we should be able to go to a 10% kind of a market share.
Yes, that's it. Okay. Thanks for now and best of luck.
Thank you.
Thank you. Our next question comes from the line of Deepak from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, sir. Hi.
Yeah, hi, Pranav. Pranav, just quick double-clicking on that fact you said that we want to expand our capacity from 6.2 to 7.7 with 60,000 coming at Dadri and another 90,000 at Sanand. Just wanted to know what is the commercialization timeline for this, because I thought that 60,000 incremental was supposed to come in Q3, but hopefully I think it may come in Q4. So just could you highlight like when do you plan to commercialize both these facilities, 60,000 at Dadri and 90,000 at Sanand?
Sure. So, sir, for a greenfield project, I think that requires a long planning. But for a brownfield expansion like what we are doing in Dadri for another 60,000 tons, that is a very flexible thing. So we keep on tweaking the timelines based on the capacity utilization, because we don't want to end up in a phase where we have excess capacity. So if we are able to sell, we are able to fast track the expansion. If we see that it might take another 2-3 months, then we can delay it. So similarly, for the 60,000 ton capex for Dadri, I think now we will be commissioning it in another 3-4 days. So yeah, that's where we are at. For 90,000 tons, I think the timelines are still intact. By end of next year is when we are expecting that to happen.
Okay. So,
but again, these are very modular things, so we keep on adjusting it.
Yeah, but it would be fair. Yeah, so it would be fair to assume that 60,000 may come in Q4 and the 90,000 may come by, let's say, third quarter of next fiscal year, correct?
Yes, third or fourth quarter, yes.
Okay. And by any chance, could you provide the split between, let's say, stainless steel and low carbon in that 90,000? And what about the 60,000, the split between the capacity where we are making most amount of investment? Because somewhere I feel that if you have already called it out that if you want to increase your low carbon capacity from 55% right now to, let's say, 60%, now obviously this will weigh on our EBITDA per ton. I know that we are also ramping up the IHT and other specialty wire, but somewhere I feel that some netting off might happen and we may not see any improvement in EBITDA per ton. Would that understanding be correct?
Sure. So our thought process on EBITDA is, to grow at 20-25% on the absolute number. So I think that we are confident about. In terms of per ton EBITDA, yes, there is some change, but there is a minor change in product mix from 55 to 60%. That will not change much. And also in low carbon, our EBITDA per ton is also increasing. Even in the first 3 quarters, we have seen better EBITDA levels in low carbon. And low carbon is a product wherein we have the B2C segment that has started kicking in. So in the second quarter, we were at about 5% B2C sales. In the third quarter itself, we have already crossed 7% B2C sales. And our target for next year is to achieve a 12 to 15% kind of a number. So even in low carbon, once we are able to get a better B2C portfolio, our EBITDA per ton there will increase and go to maybe the similar levels of our average EBITDA in the long run. With that, our addition of specialty, I think it definitely will help in absolute EBITDA per ton also going up.
Okay, one final question. So, if I recall correctly, our EBITDA per ton have gradually reduced over the last 3-4 quarters, and one of the 2 reasons was, one is your sales mix change more towards low carbon wire, and also we may would have offered some pricing discount in low carbon wire. So just wanted to understand from market perspective, let's say if you have reduced some pricing to gain market share, would it be easy for us to again go back on the previous price level, or else does it benchmark us to a new price level after whatever discounting we would have done to gain market share in low carbon wire?
Sure. So this year, that was the thought process from the start of the year, that we will have to price our products aggressively to gain market share. But in the second quarter and towards the third quarter, I think this is what we've realized. In the last call also, I highlighted this, that we've taken some initiatives in different products where we, in fact, increased our EBITDA per ton. The strategy of gaining market share by reducing prices did not really happen. We have not actually increased EBITDA per ton on any of our product. So only difference right now that you see in the blended EBITDA is because of product mix and not because of any reduction in margin. And even after this, we were able to achieve 35% volume growth. So even in the future, in the next 1 year, 2 years, or 3 years, we do not expect a trade-off between volume and EBITDA per ton anytime soon. We expect that our EBITDA per ton should be intact even if we want to grow at 20-25%.
Okay. Very helpful, Pranav. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. As there are no further questions from the participant, I would like to hand the conference over again to Mr. Parthiv Jhonsa. Thank you and over to you, sir.
Thank you all for joining us for the conference call today. We at Anand Rathi would like to thank the management of Bansal Wires Industries Limited for giving us this opportunity. This concludes the conference. Thank you everyone and have a good day.
Thank you, sir. Ladies and gentlemen, on behalf of Anand Rathi Share and Stock Brokers Limited, that concludes this conference. Thank you for joining us and you may now disconnect your line.